Joining us now for a closer look at today's market developments is Faheema Adia from Momentum Securities. Faheema, thanks so much for your time today. So traders awaiting the Fed minutes out later today. In July, we saw policymakers stand pat on rates yet again, but there were some members that voted for a cut. What will you be looking out for when it comes to those Fed minutes for, I guess, clues for monetary policy out in the US moving forward? We also have, as I mentioned at the top, Fed Chair Jerome Powell speaking at Jackson Hole later this week.
Good afternoon, Ntoleng. Thanks for having me. Yes, like you said, I think the big highlight this week is that Jackson Hole summit on Friday, where Jerome Powell will be speaking. So the market is a bit mixed on expectations there. I think we have largely seen the data released in the US recently set the path for rate cuts to come next month. So we have seen the labor market cool. We're also seeing inflation come in slightly weaker than expectations. So that definitely, I think, paints a positive picture to see some further rate cuts. But at this point, I don't think it's really clear. We do have the Fed a bit divided on whether it's too early to cut, considering the impact of the tariffs, and that we could see further impact on inflation because of that still filter through in the coming months. So it is a bit too early to say, I think, considering the impact of the tariffs, but on the other hand, we do have the data that is supportive. So I think it will be an interesting conversation that we look forward to on Friday.
So a wait and see game as usual. And just on the US, we've also had some of those retail earnings coming through. Home Depot out with earnings yesterday, profits slightly missing expectations, but the group maintained its full year outlook. What did you make of those numbers? And I guess we can talk about the state of the consumer out in the US when it comes to their discretionary spending and buying things from the likes of a Home Depot, which is more of, items that you'd renovate your house with, etc.
Yes, exactly. So looking at those earnings, I think it was a bit weaker than what the market was expecting. And of course, that is because of the US consumer that is under more pressure now. We are seeing a bit of a slowdown in spending because of the impact of these tariffs. On a brighter note, if we do see the rate cuts come through in September, I think that will be more positive for the consumer. But yeah, I think the outlook is a bit mixed when it comes to retail earnings for the next week or so. So the expectation is we could see weaker results because of the impact on that these tariffs are having on the retail sector and the consumer. But then on the other hand, we are seeing a bit of a stronger outlook in the second half. We are seeing credit card spending data has improved in sectors like travel and leisure. So that on one hand also does show there's been some improvement in household confidence. But yeah, there has been bigger concerns about the well-being of the lower end consumer, which I think we're seeing spending come under a lot more pressure than what we're seeing in the higher spending households in recent months.
Yeah, it's been interesting. It's been interesting to see what consumers worldwide have been spending their money on. Chinese toy maker Pop Art delivering a surge in profits. Earnings were up over 400%, and this, of course, driven by increasing demand for the Labubu doll. Are you one of the consumers that's spending their money on Labubu, Faheema?
No, Ntoleng, definitely not. I'm not spending on Labubu. I know this has been quite a remarkable phenomenon to see the hype for this doll.
Yeah.
And yeah, it's quite an interesting development. I mean, considering that Chinese companies have been under so much pressure, with the slowdown in that economy, they are really trying to increase their growth from exports. And I suppose unique products like this really do help these companies. So hopefully they can come up with more inventions like this going forward.
And just on those numbers, are we seeing increased demand for the dolls within China, or is it more of a global phenomenon?
I think it's definitely more of a global phenomenon. So the Chinese consumer is already under quite a lot of pressure because headwinds in that economy. I think it's just gotten a lot of hype on things like social media, which has pushed up the global demand for these dolls.
I think it's just you and I that don't own the dolls, Faheema. Uh, just sticking on purchasing power and consumers, just bringing it back home, the price of goods and services, of course, accelerating with inflation rising 3.5% last month. Your analysis on this print, and does it mean we are at the end of the 2025 rate cutting cycle? Yes, still within that 3 to 6% target, but of course above the 3% anchor that the governor set in last month's meeting.
Yes, so it looks like the headline inflation has actually hit a 10-month high now, and that 3.5% reading was largely in line with economists' expectations. So I do think there have been some once-off issues here. So it looks like the cost of beef has really increased. That's because of the foot and mouth disease. So I do think we could see some recovery there once the issues there are more fully resolved. And then the other issue to bear in mind is we do see the annual tariff increases on utilities generally come through in July. So you're seeing the water increase of 12% that came through, and that's been higher than last year's increase of 7.5%. So that's also having an effect on pushing the inflation higher. But whether we're going to see higher inflation readings going forward, I think it does depend a lot on the environment. We are seeing impacts now from the tariffs, and we need to see if our president can resolve that amicably with the US, but that could also have somewhat of an impact. But I think there probably is a chance that we could see the Reserve Bank governor change his stance if we don't have that inflation come down to the 3% that he is looking for. At the moment, he is arguing, with Treasury to try and make a change to that target band. But at the moment, we're seeing utility increases more than what can actually justify that 3% target.
And is that what's weighing on the rand today? I see it's at 17.70, or is it more of, I guess, a stronger dollar story?
I think it actually has more to do with the stronger dollar. So we have seen like a big sell-off in the dollar recently, just on the back of those pending interest rate cuts and also because of the headwinds from the tariff. So I do think that it's largely the dollar that's having an impact. So we're seeing some recovery in the dollar. But in general, we are seeing the rand hold up well despite that.
All right, let's get into the local earnings arena. DRD Gold benefiting from the higher gold price and posting double-digit growth in both its top and bottom line. This also allowed it to double its payout for the period. What's your reading of these numbers? This kind of growth expected for the gold players, right?
Yes, so it has, of course, been a beneficiary of that higher gold price. Looking at the stock performance, it's been up quite nicely, about 56% year to date. So the results look pretty good, and that came in despite a fall of 3% that we're seeing in the gold production due to some heavy rains at some of its gold mines. And even though we saw that, the headline earnings per share still increased quite nicely by about 69%, beating consensus expectations. We're also seeing a big increase in the cash and cash equivalents in the business. So they've managed to increase the dividend quite nicely. It's almost doubled from last year. And we are expected to see the gold the gold production recover next year. So that will be more positive for the company. So overall, I think it was a positive update.
All right, let's hit pause on the conversation. Before we move on to your stock pick, let's take a moment to touch on what counters your industry peers are watching closely.
Diageo, which is the liquor company, brands like Johnny Walker, Guinness, they've been under immense pressure for a very, very long time. Results recently on the 5th of August. I think what we are sitting with is a turnaround situation. Normally, just looking at it technically, I wouldn't want to be catching a falling knife, but if I take a look at those results, with new management, an increase in cash flow, they've changed strategy rather than just protecting margin. In other words, they really are taking a look at prioritizing what we are selling, monetizing what has really been old stock, and specifically concentrating on sharpening the focus of what I think has really been a company that's been just riding on brand rather than looking forward and saying how are we going to monetize our brands, how are we going to refocus.
I'll pick a local share, AVI. So things are tough in the local economy. I don't know if anyone else has noticed, but things are tough at the moment.
Mm-hmm.
The middle class is getting squeezed. Costs are going up, inflation is up, but raises and salary increases aren't necessarily up that much.
Mm-hmm.
So when things get tough, I migrate to quality companies with good management teams that try the whole time to decrease their costs and keep a lid on costs, increase their prices in a prudent way as much as they can, and that are very good with capital allocation. And AVI is one of those companies. Obviously, it's got a food side of the business and a retail side of the business, fashion and footwear. And I think they were almost an acquisition target not too long ago, a year or two ago. And the other thing when things are tough is M&A activity picks up because company can see it's going to be very difficult to grow organically, so they prefer to consider mergers and acquisitions to grow. So because of all these reasons, I think AVI is a high quality company, not necessarily very cheap, but also definitely not expensive, is a share that one can look at in these tough times.
So AVI and Diageo, just your analysis on those counters, Faheema.
Yeah, so Diageo does look like it's in that turnaround phase. It does have a new management team and business strategy, and we are starting to see that come through in the results, which are looking a bit stronger. It does seem undervalued at the moment, so I do think it is one to keep an eye on. My preference, however, in the beverage sector is AB InBev, which I see as a higher quality beverage company. And then looking at AVI, I think considering that it has been such a tough environment for the consumer, like the analyst has said, we are seeing also inflation still a bit sticky, which does impact a business like this. So it's probably one I would say I would wait on to see a bit more recovery in the consumer and also some further interest rate cuts.
All right, so what are you liking? Where are you seeing opportunity at the moment?
So I'm seeing opportunity in Microsoft at the moment. I think it's offering more value than some of the other big tech stocks we're seeing in the US that have already rallied quite significantly. I like Microsoft because it's invested quite a lot into AI infrastructure in the past few years. And it looks like the partnership with OpenAI has also been quite important for the business. Looking at the recent Q4 results, it looked quite strong, beat consensus expectations, and we're seeing pretty good performance come through across all its business lines. And particularly, there was outperformance from Azure. So looking at the AI side of the business, I think it was quite good to see that we are seeing good monetization start to come through from the AI side. And despite the increased capital investments into AI, we're still seeing pretty good profit margins from the business. So from a valuation perspective, I do think it's relatively undervalued and it does offer long-term upside. And I think just better value in comparison to some of the other big tech stocks out there.
So Microsoft, one to look out for. Faheema, thanks so much for your time and sharing your insights with us this afternoon. That was Faheema Adia from Momentum Securities.